Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. Today we'll go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and or financial topics. Let's dive in. Let's see what's going on today. If you want to follow me at _finance, and if you want to join our awesome community, finding-value.com, that's where I dive deep into all these sectors, into macro. I share investment opportunities with everybody. I do that through midweek updates, which I give on Tuesday nights, Wednesday mornings. And I also do Q&A sessions on the weekend. And generally, in the beginning of those Q&A sessions, we go through a topic. And last topic was about risk. Those are all recorded. They're uploaded to the website. And maybe I'll continue to talk about risk and companies and how I would weight between these different companies and why. I think that's very important to understand. There is no right, wrong, or there's no right or wrong here, because some people are a little bit more risk taking versus others that are a little bit more risk averse. But at least you can get my opinions on it and the way that I view things. If you are interested in signing up, special is the coupon code that you can plug in and get a discount. $25 off the first month only on a monthly membership, and you can get $100 off the yearly membership. And you can always swap from the monthly to the yearly if that's what you want to do and you're already a member. So use special as that code. Axel Kabar says aluminum and copper still didn't join the metals rally with palladium's momentum. I guess after aluminum takes out 27.93. I don't worry about if things rally and how fast they rally. All I care about is the setup, the opportunity, the fundamentals out in the future. This is a good setup. We're breaking through resistance. On the website, if you guys want to know, we took positions back here. There was an equity I really, really liked, an aluminum equity. It's a smelter, actually. Very, very big fractals or patterns. And we grabbed some really, really low, below $10 for a lot of people. And then now it's well over, it's like 23 or 24 plus, and continuing to move up. And now we're breaking out. So things are going to accelerate. So I talk about things that previously occurred so you guys get an idea of kind of what we're doing on the website and stuff like that. That's why I'm bringing it up. And we like to buy things that are low. They're pretty much bouncing on the bottom. We get in real early to protect to protect the downside, but have maximal upside potential. Then we wait. We wait for this to kind of break through and start breaking through all this stuff. And now we are cruising. We've got a breakout, and now we're sitting well over 100%, maybe even 200% gains. I know some people bought in at $6, and if you're at 24, well, do the math. That's 3x. So 3x is a pretty good chunk of money to be sitting on a fresh breakout on aluminum. Now, I'm in the camp that we are going into a commodity bull market. There are others who think that this is a unique situation, that gold and silver and platinum and palladium are going to get the bulk of the money. I disagree. I think commodities and the whole cycle is going to move together just like it has all of the other cycles. So what I'm doing, and I know all of the eyes are on pretty much gold and silver right now. There's more eyes coming to platinum and palladium as time goes on. And yes, we already took positions in all of those, and we're buying at bottoms. But there are other sectors right now that no one is talking about. You think anyone was talking about aluminum down here? You think anyone's talking about aluminum right now? No one's talking about aluminum. No one cares about aluminum. But yet we pulled, 100, 200%, 300% gains on this. from the bottom. Heck yeah, that's exactly what we want to do. We are quietly buying when everyone else is looking somewhere else. That's what we're doing. And there's other sectors right now that are down with terrific entry points, terrific entry points. Now you're going to have to be a little bit patient to get full advantage of it because when you get in, you're buying it when the money flows are kind of leaked out of it, and then you have to wait for it to come into cycle, and that might take a year or two to really get moving. And I know people, there's a lot of gamblers out there. They like gambling with their money. They want to see crap move. They just want to see crap move. Now, if that's the case, you're going to have to get stuff that's freshly breaking out, more like aluminum here. So we got EIA inventory moves. So crude's up 3.5 million. Gasoline distillates are down 300,000 and 4.5 million. So that's a draw, at least with that data that she is showing there, of about a little over 1 million barrels of product. Because I take crude and then the refineries take crude and convert it into usable products, the final products like gasoline and distillates. So that would be a 1.5 draw, but I've seen other numbers too that don't match this one here. But that I think that's the official one. It says, does oil ever go up? That's his name. Does oil ever go up? Oil's been sinking since 2022 and it went up briefly. Then because of the we're going to sanction Russian oil bullcrap from USG. Is there a more cursed commodity? 10 years of total crap. I think oil will only go up when the Permian dies, and it ain't dying soon. I love the sentiment, guys. Love it. The more bearish it is, the better it is for us as investors. So what's going on here? Since 2022, we've been in a disinflationary period. You know what turned up in 2022? Gold did. Gold turned up. You know what we really started buying a whole bunch of? Gold and silver. After 2022, that's where we were buying all those bottoms and gold and silver mining companies. Why? Because it could be a disinflationary period that was coming. I didn't know as we were going through it. I just knew that we were getting bottoming patterns in the mining companies back then. Now we are up on some of those between 100% and 800%. That's what it's gone up to now with a lot of our leaders. Some of the producers are crushing it. And a lot of people, a lot of retail investors are saying, well, what gold and silver company should I buy? My answer would be, you want to buy what people aren't talking about. You want to buy the things that people don't like oil here. No one likes oil. No one likes energy service companies. That's how you make the money, guys. That's how you make it. You buy it when everyone else is talking trash. 10 years of total crap. You know what people were telling me about platinum when I was buying platinum? 14 years. It hasn't moved anywhere. Why the heck would you buy that? This is the same thing with oil. It's like the herd can't, it's like they can't reverse their psychology. They can't buy it when people hate it. And then you have to have patience too, because then you're going to have all these people telling you that it's no good. And you're over here buying it, you're accumulating it with smart money, and then you just sit and do nothing. And then a few years out, you know what's going to happen? Same thing that we did with gold and silver. We buy it in 22, 23, 24. We're now in 25. You wait a year or two, and now you're up multiple hundreds of percents. You know what's going to happen with oil? That's the same thing. We're going to bottom here probably 25, maybe early 26. You wait a year or two, and then you're up multiple hundreds of percents. And then your better companies are going to be up 600, 700, maybe even over 1,000%. And that's how the cycle works. That's how it works. You buy when sentiment's crappy. You sell when sentiment is euphoric or good. And then you just repeat it. You just repeat. Use the technicals for entries. Use the technicals for exits. Use the ratios to make sure that you're cheap. and just repeat. $5,000 might be too conservative for palladium, as palladium looks angry coming off that bottom. Let's look at palladium. So he's got this chart here. He's got the relative strength indicator. I don't really use the relative strength indicator. What I use is patterns. Patterns, patterns, patterns. So let's go here. So this is palladium. Do you guys notice something here? I notice a falling wedge into a double bottom. I notice a falling wedge into a double bottom. You guys see that? This is the recession for the commodity. This here is the bull market. What is coming is the bull market. And I've got that fractal overlay. So the fractal overlay is the one I grabbed before, and I just overlaid it on our current one. Now, this was a pretty big pullback because it was 2008. That was the 2008 crash right here. That's '08. That's probably what's going to occur there. We're probably going to about $7,000 for palladium. If the cycle were to repeat the exact same, I've basically elongated it for the fractal sizing over here. So if I were to guess, maybe 7,000. Now, I don't worry too much about the actual price. Like, it's not about being perfect on your price prediction. What's better is getting a good entry point. Getting a good entry point. Now, is palladium going to outperform platinum? I'm a big platinum guy. So whenever you get the ratio to be low, like platinum here, this is where you want to load into platinum. I would be long platinum and riding it higher. Now, there could be a time in history here, or a time in the future even, where platinum and palladium run together. They're very similarly priced. And that could be somewhere around here. And then I think we'll eventually break through, and platinum, as we're running more deficits in platinum than we are in palladium, I think eventually platinum could outperform palladium. And that's what the cycle's suggesting here. The cycle's suggesting that platinum could outperform palladium, and I think they could both go up tremendously. Tremendously. Now, if we do the what if game, what if palladium goes to 3,000-4,000 bucks or 5,000 bucks, whatever it is. And what if, and I don't know if this is going to be the case, but what if platinum gets up around 5 again? That seems like a pretty good area, around 5 here. So it makes the math a little bit easier too. So if we get to 5, and let's say palladium's at 5 grand, that means platinum could be $25,000 an ounce. Not too shabby if that were to occur for someone who's buying it underneath the cost curve below $1,000 an ounce with premium. And people telling me that it hasn't moved anywhere in 14 years. 25 bagger perhaps, or maybe on the downside, maybe it's only a 5 bagger or something. Who knows? I'm not stating I know for a fact that we're going there. What I do know is that it was going to go higher from where I purchased it, and the risk reward was quite ridiculous. So that's what I do know. Coming down, so platinum. We're talking platinum, we're talking palladium. I like the platinum group metals. He says a generational breakout is underway. Measured move targets $2,900. Look at that big squeeze. I bought it right when it was squeezing in the corner. See, this is what I look at. I look at the pattern. The 1 hump, 2 hump, 3 hump consolidation. I would draw it differently. The way I would draw this is I would grab this and I'd squeeze it up here. So your consolidation was actually this, in my opinion. It's the 1 hump, the 2 hump, and the 3 hump. That's your consolidation. We had another one back here. Then we had another squeeze. It's like interest rates squeezed us to death almost. So there's another squeeze behind it. And sometimes you get this. Sometimes you get bullish. I was getting bullish here. So I was buying it down there. We came up. I'm like, oh, here we go. Then we came back down and it gave us a extra time to accumulate more ounces, which I did. I loaded the boat. I loaded to the gills in physical platinum. Now we've broken out. Now everyone's talking about platinum because the price broke out. Remember, everybody knows the price of everything and the value of nothing. Price broke out, and everybody, oh, it's a generational opportunity. I'm sure he's not that bad. I'm sure he could figure out where to purchase stuff. But a lot of people, they're talking about platinum group metals. Did you see that move? Did you see it move up? You don't want to be that person. You want to be the person that's buying it where we were buying it. You want to be a part of a community that can buy this bottom? Join us. We're buying bottoms right now in other sectors. This will probably run all the way up here and get a little bit of a pause, similarly to this move here. And then we're going to get a big breakout. This will be a launching pad. This whole thing here will turn into a launching pad. With time, obviously. I'm not saying this is going to happen tomorrow, although it could. I mean, there's some crazy stuff going on. So if I were to take this fractal to show you guys kind of what maybe it could look like, and I'm not saying it's perfect. I'm not saying that. So this is a much larger fractal. So I'm going to do this. I'm going to squeeze it up. And I'm going to blow this thing out because we need to get some room up here. So this is the fractal. If you guys notice, you guys see that fractal overlay in the beginning here? I'm going to try to get this squeezed up a little bit. Okay, do you guys see the fractal? It's the same fractal. So what I'm doing is I'm getting this bottom one and lining it up to the top there. I'm not going to squeeze it anymore. I'm just going to leave it somewhere like that. That's going to be a close call. Look where the projection is. About $12,000 an ounce. $12,000 an ounce. If we did the same move, the previous move, and I'm just overlaying it roughly on top of it to get us a similar move. Now, I don't know if we're going to get a pullback like this because that was back in the 2001, 2002 recession. And maybe we do get a recession. Maybe it does do that. I don't know. But that's what I think we're ultimately going to go. It's probably up around 10, 12. It could be 20. Who knows? Somewhere up there. That would be my not a fully educated guess, but somewhat fractal guess when taking the fractals here. So that would be my guess. But yes, it is a generational breakout. Yes, it's insane, and I am happy that we have captured this move on the website with everybody in the community there. I'm very happy about that. And happy for them. And here's silver priced in the S&P 500. So silver versus the SPX. What does that look like, guys? What happened here? 1970-71 breakout. You know what else was back here? A commodity bull market. Commodity bull market. You know what else happened here? Commodity bull market. You know what else is happening right in front of our eyes? A commodity bull market. No way. So the silver is outperforming the S&P 500. Now there's another pattern here. If you can't see it, let me show you something even more ridiculous. All right. So this is silver, XAU, USD divided by the S&P 500. I'm going to show you something more ridiculous. And you guys, if you've been a part of the channel here, you probably already know what I'm going to do. So here it is, right? We have a 3-hump consolidation here going back to 1928. It's this 1 hump here, 2 hump here, 3rd hump there. Those occur in consolidations. It's possible that since when the Federal Reserve was created, we've consolidated in this pattern there, right? What could come could be a gigantic breakout and a very big move all the way up here. What that means is that silver and gold and commodities are going to go ballistic against the S&P 500 and other financial assets. Another thing that we can also see And you guys know I like my double bottoms. I'm going to show you something else here. So if we look at this side here, what this is a recession or a downward move in the ratio of silver versus SPX. Then we get a double bottom. So if I draw a line across here, that is a double bottom. So we came down. Generally, what happens when you come in, you get a falling wedge. This here is the falling wedge formation, much like we saw earlier in palladium. Your double bottom is this here. It's a big double bottom. So here's bottom one, here's bottom two. And we're coming out of bottom. So when we break this, this is not going to stop here. We're going to go up. The pattern suggests that we go way up with this ratio. That's what it suggests. And I'll show you some more falling wedges with double bottoms. Check this. Oh, we got one coming up. So we're going to check it as we go through this together here. So we come on down, right? This is SILJ divided by silver. The ratio appears to be holding its back test, which may signal a fresh impulse leg higher. That's that around the apex move, the consolidation, and then we're breaking. You could also draw this differently if you can identify patterns. You don't have to be so strict with where you put the lines. If you understand what I'm showing you here, you're gonna see, and I'm gonna draw this real quick, falling wedges into a double bottom or a bottoming pattern, and then you get a launch. So this falling wedge into a bottom, into a launch, is the same falling wedge that we've got there into a gigantic double bottom. Now, what people don't understand is that the previous bull market, this one here from 2000 to 2011, that was in a bottoming pattern. That's not the big move. It was also in a declining interest rate environment. It's also a part of a falling wedge. So the big move is over here, and I don't know what this looks like, guys. Like I again, I am coming to the and drawing conclusions myself here. It's not like I'm reading someone else's book. It's my own conclusions, and this is coming to this conclusion off of a bunch of thousands of different charts that I look at from ratios and all this other stuff. We could go way up. I'm talking like we dwarf the 1970s, and no one will even recognize the world that is over here. They won't even know what that looks like because we've never seen it in anyone who's been alive. And it's not just this pattern, and obviously I can go into a whole bunch of other ones. I'll show you one just to show you US oil versus SPX, which is another one. I don't know why this stuff isn't showing up very quickly here. That's also squeezing up into a corner. There it is. Squeezing up into a corner with the same fractals. And this thing is also doing something very similar as silver to SPX, as gold to SPX. And the bond market, I think, is toast. So this over here, I'm sorry, guys, but like people aren't going to, it's going to be a different world. And it's going to blow the 70s out of the water, too. It has the potential to do that. And that's oil versus SPX that I'm showing you here. And this is the 1, 2, 3 hump consolidations that we are getting here. These are the small little third humps. And we're squeezing up. Now, this is a very long-term chart. This goes back to the 1800s back here. So this is going to take some time to play out over here. This here, if in my opinion, this is one of the biggest opportunities in commodities that we've ever seen, and people won't be able to identify it. Because I'm looking at things from all sorts of different angles. I mean, how many people talk about US oil versus SPX? Probably not that many. And right now, the sentiment's pretty crappy. This is a falling wedge. Well, I didn't draw it that well, but how about it's like this? That's a falling wedge. So it's coming, and be prepared. Chart of the day: the coming North American LNG wave, liquefied natural gas, with combined export capacity from US, Canada, and Mexico doubling from now to 2029. The North American expansion will account for 50% of global LNG export capacity growth. Here's my question. Do we have the natural gas to fill this? If we don't, natural gas prices are going to rocket. I mean rocket. And you know what else is going to rocket? Coal prices. If we can't get this thing set up like this and we don't have the flow rates, now some people are doubting that we have the flow rates. Goring and Rosenzweig, they're saying, you know what? I don't know if we've got that amount of natural gas. Now, I don't know what's going to happen. I don't know if we have the gas or not. That's not why I'm investing in it. I'm investing in it because natural gas is cheap as crap. Oil is cheap as crap. We've got this in a corner of oil to SPX ratio in the corner here. What is my downside if I take on this position? Well, it's pretty much nothing because we're already down. Okay, so we've got a great value in oil versus other asset classes. And natural gas is really cheap. The rig count's down. Drilled uncompleted wells are basically drying up. What's our downside risk? Well, it's not much, is it? Well, what's our upside potential if all this flips and we don't have the natural gas? It's called the moon. It's called the moon. So it's being able to identify opportunities like I just told you there and putting on the bet when no one gives a crap about it. What is everybody talking about right now? Gold and silver and platinum, palladium. People don't care about oil. I just showed you one of the comments above. They don't care about natural gas. I'm showing you the setup. So when people say, how come you're not telling me about the opportunity in platinum? Secretly, I'm telling you without telling you that the opportunity in natural gas and oil is here. Now, what you're going to say is, well, it's not going up. What I'm telling you is that is why you're not making money. Because you are chasing prices. You are not chasing setups. You're not chasing opportunities. You're not chasing chart patterns where they're squeezing into the corner. You're not using patience to your advantage, like I am. Coming down, gold and silver aren't rising because of inflation. They're rising because this is an engineered global insolvency crisis, deflationary debt spiral, dollar shortage. That's why oil is falling instead of rising. That's why Argentina needed dollars. This isn't the 1970s. That's the stupidest crap I've ever read in my life. That is the stupidest thing I've ever heard in my life. I mean, really? You think we are in a deflationary debt spiral? We are in a dollar shortage? Tell me where these dollars are gaining purchasing power outside of maybe other currencies like the Japanese yen, which they're just debasing to all get out. We are not in a deflationary debt spiral. No way. Is that why I'm paying $20 a pound for steak? Is that because the dollar is increasing in its purchasing power? No. The price of gold and silver are going up because the dollar is going down. Do you think it's by happenstance that we have, just by happenstance, a simultaneous shortage of gold, silver, platinum, palladium, copper? Now aluminum's breaking out. What about uranium? You think they just all happened to have simultaneous shortages all at the same time? No, it's the dollar. They're all being measured in dollars. Dollars is your problem, guys. Dollars is the root cause. Period. It's not a Deflation means that you are destroying credit in the system. We are not destroying credit in the system. The housing market is as strong as can be. The 1929 crash was ultimately the deflationary deleveraging of bad loans in the system against residential real estate market. The other was 2008, which was again the defaults of residential real estate loans, which was deflationary. It was loans blowing up. Now, could there be some loans in the system that blow up? And are they large enough to have it be a large impact? The biggest loans are in residential real estate. It's like 70 to 80% of all loans is against residential real estate. Now, we could have commercial real estate, but again, I don't think that's going to be that bad because that's just rich people getting kicked in the nuts. It's not, everyone in the system where they're handing back loans to the banks. I just don't see that happening. At least nowhere near the same amount as 2008 and 1920s, going into the 30s. Now, this guy says, I don't understand why so many people can't see it. Gold added over 300 billion to its market cap today, just today. It's been adding an entire Bitcoin market cap in 1 week. And people keep saying, where is the money going to come from, bro? I don't understand how most cannot see that as soon as gold stalls, BTC is going to rip. It is the most obvious rotation stunt from big money. BTC is being held down on purpose so big money can run up gold and rinse it for as much as they can. What's my opinions on this? I don't think so. I don't think so. This is where I think these guys have it wrong. Don't sit here and fry me in the short term. This is a long-term big picture view. I think that the market conditions are changing for this to occur where hard assets are going to outperform financial assets. And I think that Bitcoin, let's do XAU USD divided by IXIC, which is the NASDAQ Composite Index. I think that Bitcoin is about to get its SHIT kicked in. That's what I think. I think that we are changing market conditions, and I think that we're going to see a falling wedge into a double bottom, break out, and then do this against financial assets. That's gold versus the NASDAQ Composite. The NASDAQ, if I were to overlay BTC USD overlaid on IXIC, it's just a leveraged, in my opinion. Okay, I can barely see it here. Let's I can't. Okay, so there's the Nasdaq. I'm just going to kind of go over like this. So I think that BTC is just a leveraged play of the Nasdaq, right? And then I think, and this is me. I'm going to chart it on logarithmic here. I think that this is one gigantic wedge for Bitcoin, and I think this is going to break to the downside. I think that this is going to be the largest bubble in the history of mankind here. Is going to be in Bitcoin here. And I think this is going to break lower, and it's going to be a nasty breakdown. And I'm going to take a guess here. I'll stick my neck out and make a prediction. I think Bitcoin is going to go bust, where the mining costs are going to be higher than the Bitcoin price, and that the Bitcoin price will freeze because the processing fees are going to be so expensive that the price will ultimately get frozen in time because the processing fees will cost more than what Bitcoin is worth. This here, which started in 2009, in 09, this was the bull market in NASDAQ. We are now shifting into a new paradigm of hard assets. So if I were to do IXIC, that started in 2009. So this was the bottom of it. This is a kind of a big double bottom. So again, this is your falling wedge. This was your double bottom. And then we broke out and went into what I think could be a potential rising wedge here. And then I think we could have like a little throw over top or something, and then we break down and do another one of this type of movement here, where we get a falling wedge and a double bottom like this. Do you guys see that pattern? The falling wedge and the double bottom there. So this here, I'll just draw it a little bit more, a little bit better, so you guys can fully understand what I'm talking about here. There's that. I'm going to draw this more neatly across. This is your double bottom here. And then we're going to break and move on up. So when I go and I talk about these other asset classes, we are located here or here on other asset classes and commodities. This one already ran its full cycle. So what's coming in commodities is going to come all the way up here. So if I were to like take this fractal so you guys can see it, and I'm being a lot more generous here than before. Okay, so there's that falling wedge and the double bottom. I'm going to copy it. I'm going to bring it over to say like a XAU USD divided by SPX ratio, right? Actually, let's do this. Let's do XAU USD divided by uh, IXIC. Okay, because it's a little bit easier to see. I'm going to blow this up. I'm going to show you, and I haven't done this, guys. Like, this isn't something I've done. I'm going to show you what I think will occur. So we've got that. This is a ratio, though, so it might get a little bit nasty. Like, I gotta somehow get it way up here. So what this is going to do is that will be a double bottom. And then if you see this double bottom is that double bottom. It's probably a little bit too big, so I got to shrink it up a little bit. So it's the same pattern, and I'll just leave it above like this. You get a falling wedge into a double bottom, and then you cut across here. And it's the same pattern here, the falling wedge into a double bottom. And that is right there what I'm telling you. I'm like showing you the herd psychology, which is imprinted in the chart here. So what I'm doing on the website for everybody is I'm showing you guys this, yes, and I'm showing people, outside of the website here too, where we're located in this cycle here, which is a falling wedge double bottom. We're starting to come on up. What I'm doing, and I'm gaining confidence in all of these patterns because I can recognize them. And then I'm piecing it all together. Palladium and platinum continue to play catch up to gold and silver as predicted. There's your double bottom on palladium, and it's breaking higher. And this is the sideways action that people were getting all frustrated with. And there's the big breakout. This is going to be a long, big bull market, guys. Like we're at the beginning. The Nasdaq in 2009. So I mean, just so you guys understand, like I don't know how else to kind of like show this. We are investing in the companies here. And then we go up and yet we get pullbacks and whatever, and people get scared of the pullbacks. This is what's coming, guys. That's a gigantic move. It's coming in commodities next. This move is done. So everybody thinks that this is like the awesome move. That's not where the move is going to occur, in my opinion. And this is all the ratio charts that Grady's showing you. This is just evidence that if you take a silver company versus NVIDIA, that you have a falling wedge, a false breakdown, and now this is breaking out, and it's going to do around the apex move. We have around the apex moves in energy service on the website that we have purchased. Now it's all about patience. It's all about waiting 5 or 10 years to get ultra wealthy. It's really what it is. So he's using First Majestic as a proxy for the silver versus NVIDIA, and this is the false breakdown and then the big move higher. And then he's saying 151,000% increase of First Majestic against NVIDIA, and that's NVIDIA going down or chopping sideways as First Majestic goes vertical. Now, we bought the absolute bottom here in First Majestic on the website. We bought that. We bought a whole bunch of stuff. Hundreds of percents up now. We're going to turn it into 1,000. We're gonna have my goal for the website. If people can buy when I'm buying, I'm hoping that we can have 40, 50 plus 10 bagger plus companies. That's what I'm hoping from beginning of bull market to the end. And I'm hoping that maybe we have one or two 100 baggers in there. Fingers crossed. This is API, and API had way different numbers from the EIA. They had +7 crude, +3 gasoline, and distillates -5. Way different than EIA. I was like, what the heck? So that was way different. Gary says, with annual silver production of 800 million ounces and total demand approaching 1 billion plus ounces, the deficit must be filled from above ground stocks. Those stocks are finite and rapidly depleting. Due to 5 years of dipping into them, physical silver will likely one day soon become a luxury good. Like rare art or vintage wine, physical silver will be available only to the ultra wealthy and institutional buyers. This is a high probability that the middle class will be priced out of the physical market entirely. That is a high possibility, but a lot of people talk about supply and demand, and they focused on the deficits that we have today. I focus more on the big picture. So when you do like a silver to, let's do like TLT. TLT is the bond market. So these are bond prices, and this is silver price. So what we have is basically we had a big move from 2000 to 2011, which was our first initial impulse move up. We had a falling wedge. We also then went sideways for a little bit, which created, again, a very similar kind of double bottom pattern. We broke out, did a retest. This is where a lot of the commodity companies are located, is where that circle is, or they're just starting to come higher. And then this is going vertical. Yeah, bonds are an absolute SHIT show. And silver is going to absolutely rip, which it is. And I'm showing you the chart of how I view this and how I kind of broke down that bottom. We're going to do this in all commodities. Falling wedge, double bottom into the breakouts. And we are breaking higher. So if someone says, oh, I don't think copper is going to follow. What do you mean it's not going to follow? Look at that chart. I just showed you like 5 examples. This was just a consolidation there or an ascending wedge. Doesn't really matter what you call it. And we're ripping higher. You think steel's got the same damn pattern. Falling wedge into a double bottom. We have an accumulation cylinder. Oh, this is silence. That also has it too. Falling wedge into a bottoming pattern, double bottom, and then we're starting to just break out. Now, this isn't as progressed as some of the other sectors. And we have been buying the retests. We've been buying here in some companies, and we've got some really good setups out there to buy at bottoms. And I don't know what they'll end up being. We are taking on a little bit of risk. And I let you guys know what's risky and what isn't. I call that speculative. Speculative companies are risky. And then we've got some bigger companies that have the oomph to make it worthwhile. So all these are set up here, guys. They're all set up. And then, everybody's talking about these breakouts. Been saying all year that one of the most significant breakouts in history is in the making. It followed the arrows perfectly. From linked post below, the monetary reset is moving into the next phase. For heaven's sake, do not miss this move. This is it. Mother of all, very probable cup and handles breaking out. I don't know what else I can do in this clip to convince you more that gold, silver, and commodities are entering a bull market than what I just did. And I can tell you why I'm not bullish on Bitcoin. I think it's garbage. I don't think it's going to move up with hard assets. I think it's going to go down with the Nasdaq. Now, could I be wrong? I very well could be wrong. I'm not stating I know the future, and that asset has not existed during that time. Now, the only thing that I will say is you've got Bitcoin here with a rising wedge, and that is not a bullish setup. That is a bearish setup to go lower. And Michael Saylor, he loves buying tops. He bought the top in his own company. He bought the top of the Nasdaq bubble, and to me, this looks like a top. It walks like a top. It looks like a top. It smells like a top. I could be wrong, though. I'm not saying I know everything, but that's not where I'm deploying money. And retail is over here. You think retail is going to get rich on this? Where are all the retail investors? All they do is chase price. They are going to get neutered here. That is my guess. But that's all I've got for today, guys. We're going to end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Special as a coupon code. Again, we have a Q&A session coming up this weekend, Sunday at 5 p.m. Mountain Time. You can ask me whatever you want. Bring it. Bring it on. Bring your hardest questions. The only thing it will do is make the community stronger if you ask really, really difficult questions. I think a lot of people over the years have asked me about just about everything, wide range of things. And again, I'm not so concerned about where price will ultimately end up. It's the opportunity, the size of that opportunity, and getting exposure to the opportunities. And yes, you can give rough estimations. No one's going to be perfect at projecting this stuff, guys. Just be careful out there too who you're listening to. In my opinion, I kind of messed up when I was listening, earlier when I joined. Basically, I was listening to YouTube to try to figure out ways to invest and listening to a lot of these financial channels. I was basically a lot of people like you, and I got fed up. I got mad. What I do about it, I started my own channel. That's what I did. And then that's where we're at today. So that's all I've got. We'll see you Sunday, guys. See ya.